Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look in a bit more detail at our W3 or Wave 3 trade setup we have at MTPredictor. But as usual, we start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. Right, the setup I want to look at is this W3 or Wave 3 trade setup. I want to look at an example that unfolded yesterday on a 5-minute chart of the DAX, but they unfold on all time frames and all markets. So what is a W3 trade setup? Well, if I scroll out a bit, and if I just put our major pivots on, you can see that we have a sequence going down here, and I just want to just right mouse click here, do Elliott wave major, and you can see here the DAX made a 1, 2, 3, 4, 5, a 5-wave sequence with the low there right at the typical wave 5 WPT. So a nice Elliott wave 5-wave sequence. But the W3 or Wave 3 trade setup, can you see here, is basically designed to catch the wave 3. In other words, it's designed to come in at the end of the wave 2, as you can see here, to then trade the wave 3. Why do we like this? Well, wave 3, as you can see in this sequence, is actually the longest and strongest in the completed 5-wave sequence. So typically you can get into a trade setup with the smallest initial risk, as we'll see in a bit, to try and then trade the strongest and longest wave in the completed 5-wave sequence. So represents the largest potential profit in relation to the smallest initial risk. So this is what we're trying to catch, this particular swing from the end of the wave 2 into the start of the wave 3. So how do we do it? Well, first of all, let's just take those major swings off just for a second to clear the chart up, and I will show you how we do it in MTPredictor. Just clear everything off. Whoops, clear all. Right. At MTPredictor, we use our unique isolation approach to Elliott wave. What do I mean by that? Well, first of all, we understand that markets are typically random about half the time and only have clear patterns about half the time. That's why it's extremely difficult to try and place an Elliott wave count on the chart all the time. That's why many of the traditional kind of Elliott wave software and Elliott wave teaching sources fall down, because Elliott wave patterns break down when the markets turn random. So how do we cope with this MTPredictor? Well, we start our Elliott wave sequence when we get a clear picture. In other words, we use our Elliott wave patterns in isolation. It's my unique isolation approach to Elliott wave analysis. We do this, in other words, when the higher time frame chart comes into higher time frame support and resistance. So a higher time frame is a chart between 3 and 5 time frames higher. So what we do is go back to the higher time frame chart. So on the 5-minute chart, this will be the 15-minute chart. We go back to the previous highs and lows. I just want to use our trading mode again. If I jump back here and I go to this previous high, we right mouse click, we do decision point. Can you see how that's on the chart there in advance before the market even got there? So when I turn trading mode off, can you see how the market went up and made a meaningful reversal at that level? So that's when we start our sequence. By the way, just as a PS, you can see on this 15-minute chart, you can see our Elliott wave sequence really clearly here. There it is. Off that, the start of the sequence started at our higher time frame resistance 1, 2, 3, 4, 5. So it's really quite nice there. So I'm just going to put that DP back on, and now I'll go down to the time frame we're trading. And can you see how the market started to make a meaningful resistance at that particular level? So now if I use our training mode again, and I jump back to when that tier 3 setup came in, what we're doing is we're starting our Elliott wave sequence here. In other words, we're looking at this in isolation. So we start here. This is when we assume the market pattern is starting to become clearer, when it makes a meaningful support or resistance. In this case, it's a high off a higher time frame DP resistance area. So the initial move down will be wave 1. We're then looking for an ABC correction up, because the most common pattern in a Elliott wave 2 is an ABC correction. So we're looking for that ABC correction in a larger degree Elliott wave 2. Now at the moment this is 1 or A or 2 or B, because as it stands at the moment this could be either, but because we're coming off a higher time frame resistance here, this is more likely to be a wave 1, this is more likely to be a wave 2, subdivided into an ABC. So that's the initial pattern we have here. So let's clear that off. If we now place our analysis on our red cell bar, right mouse click, do analysis, this is where you can see we do use our position sizing. In this case, keeping the initial risk small under control, less than 2% on a sample $20,000 account. You can see we actually adjust the pip size here to bring it back into dollars. If you're trading a, say, euro account, as the DAX in euros, all the position sizing will be done in euros. So let's keep it in euros. So this is why we like this trade setup, because if this trade setup goes wrong, and as we said at the start of the video, there will always be losses. The losses are kept small, in this case at one risk unit. So if this goes right, then the profit hopefully is large, and you see here, if the profit gets right down to the typical wave 3 WPT, in other words the typical area where the wave 3 is likely to end, the profit will be 10.7 or 10.5 times greater than the initial risk. So in this case, if it's wrong, you'd lose 1 R or 1 risk unit. If it's right, you'd make approximately 10.5 times the initial risk. That's why we like these trade setups. So now let's turn trading mode off and see what happened. And as we've already seen, the market declined nicely. It went into the typical wave 3 WPT here with this profit of approximately 10.5 R or 10.5 times the initial risk was available. As we've already seen, if I right mouse click down the bottom here, do Elliott wave major, whoops, I'll just put that back on again. If I do Elliott wave major, there's your 5-wave sequence. So what we're looking to do is take out a chunk of profit out of the wave 3 swing. So here you can see the start of the sequence at the higher time frame, DP support and resistance. The initial move off that DP would be considered wave 1. We're then looking for the initial correction, which is a wave 2. Typically that subdivides into an ABC, and see there, that's the pattern that it finds there. We're then looking to come in as the wave 2 is ending with a small initial risk. Let's get the analysis on the correct bar, the small initial risk, to then trade the wave 3. The wave 3 is typically the strongest and longest in our completed 5-wave sequence, as we can see here. So this represents the largest profit potential in relation to the smallest initial risk. So this is a very good example here on the DAX, where we can see the completed 5-wave sequence, where we can see that the wave 3 is the strongest, where we can see that the whole sequence starts at the higher time frame DP, and here we can see the position sizing giving us a profit of approximately 10.5 times the initial risk. If we look at our MTP trend, this also confirms the downtrend as well, because the MTP trend went red after we came off that DP resistance to indicate the large trend was down. So all in all, a very good example that shows exactly what we're looking for in our wave 3 or W3 trade setup in MTPredictor, which, as we've already described, is looking to catch the end of a wave 2 to then trade the wave 3, which is the strongest and longest in the completed 5-wave sequence. And this is why it's one of our favorite trade setups, because this represents one of the largest profit potentials in relation to the smallest initial risk. Remember, this is not a trade where you'll make all your 100% success rate. There's nothing like that out there. This is why we use our position sizing, because when we're wrong, and we will be wrong, there always will be losing trades no matter what approach you do, the losses are kept small. So the losses are kept small at 1R, but the profits hopefully over time are large. And again, that's why we like this trade setup. It's one of our favorite trade setups, because we have a large potential profit in relation to small initial risk, because we're trading the wave 3, which is the strongest and longest in our completed 5-wave sequence. So a great example of our W3 or wave 3 trade setup in MTPredictor.